Hello traders, and welcome to this video preview for my brand new technical analysis video course for all of you technical traders out there who are using strategies to try to get into the markets. So this course is very in-depth, looking at technicals, and what I'm going to be showing you is how to use technical strategies to get in and out of the market. So I have an entry and exit strategies while using risk management. So understanding how much of your account to risk on a specific trade and what is your risk to reward to make sure your account is always growing. We also look at volatility analysis. So historically, does a currency pair move by a certain amount on the percentage terms on a daily basis, weekly basis, monthly basis, and that will help you know where to place your stop losses when you're taking a trade. Also, we give you Excel spreadsheets going over interest rate differentials. So if you're buying the dollar against the pound, for an example, you need to understand what is the difference in interest rates and how much does that mean I'll be receiving in my account overnight or paying out of my trading account overnight. And that's called the interest rate carry trade rollover. Very important for technical traders to understand. And then you also get a video recorded copy of the course for yourself, and you get 1 month's membership for my premium service of pip count effects. So what we'll do right now, I'm gonna take you over to the computer screen and give you a quick preview of what we'll be covering in the course. And I look forward to you taking this course, and I hope you implement everything that I teach, and it should stand you in good stead. So let's go over to the computer screen. Hello traders, and welcome over to the computer screen, where I'm now going to run through all of the key topics that I will be covering in this course and how much you will be learning for you to implement this into your trading system. So first of all, we'll have a bunch of technical strategies showing you how to get into the markets and out of the markets using different types of conditions. But there are a few key fundamental factors you have to understand first before we go into the strategies that you'll be learning. So first of all, you'll be looking at historical data going back 10 years to look at how much a currency pair fluctuates on a daily basis, as we can clearly see here, on a weekly basis and on a monthly basis. Now this is in percentage terms, and what this is going to help us do is when we are implementing our technical analysis strategies, we have to first understand how much does a currency pair historically move on our different time frames. So if you're intraday trader, you need to understand how much does a currency pair fluctuate by. If you're a weekly trader or a monthly trader, the same rule applies. Now, why do we need this? It's because we have to understand in the percentage term how much does a currency pair fluctuate by, so we would know where to put our stop loss. For an example, if a currency pair on a monthly basis, if we're looking at the Aussie dollar, US dollar moves, for an example, by 3.8% historically over 10 years, then we know if we're going to be holding a trade over a 1 month window, then that is the type of stop loss distance we need to have if we're trading on a monthly basis. And then of course this will help us to have profit targets using our risk to reward, which will be, for example, 3 times greater than our stop loss, to make sure that we're always making profits in the market. So that is understanding volatility, and we'll be running over that, looking at all the different currency pairs. For an example, so you have all the US dollar pairs, and you will get these spreadsheets for a download, and you'll be able to look at any currency pair historically and understand the historical price data, looking at how much it fluctuates by. So if you are using our technical strategies for any currency pair, you know how much the currency pair moves on a daily basis, for an example. And then we'll go over to risk management, because this is where the risk management really comes into play, and we'll be showing you guys how we use, for an example, 2% risk management, and given examples of how much this means if you lose 8 trades or 10 trades, for an example. And then we show you on the flip side, if you were to win 8 to 10 trades using an intelligent risk to reward, how it basically means it's virtually impossible for you to lose your trading account, because your account balance is always protected per trade, but your winnings are always a certain amount of times bigger than your losses. So your account continues to grow when using a risk to reward and risk management. So that's really important for helping you make money on a long-term basis. And then we explained interest rate differentials, which is so important for trading the currency markets. And basically what this is showing us, if, for an example, if you're trading the dollar against the pound, we need to know how much interest are you going to be paying out when you're using one currency to finance the purchase of another currency, and how much will you be receiving for the currency you're buying. And then we'll be working this out by using different lot sizes when we're placing trades, and you'll be knowing then on an overnight basis how much you'll be paying out and how much you'll be receiving. So that's really, really important. And we have the different types of trading accounts for mini lots, micro lots, and lot sizes. And then more importantly, if you go over to my Forex University, which you'll have access to, you can then look at pips, points and percentages, units, profits and loss, leverage and margin. And you can use all of this to understand how to implement the risk management strategies into the markets, and using the interest rate differentials spreadsheet to make sure that you're protecting your account to all times when you're getting into the markets. And then I'll be also showing you COT reports, which is looking at the commitment of traders reports. So this is showing you on an institutional level how much are hedge funds committed to buying a certain currency, and how much are investment banks committed to buying a certain currency. And you can update this data weekly, so you can see how much the market is committed to buying a currency, and then you can track the currency pair on a weekly basis, daily basis, for an example, and know if a trend's really building. And that will help you implement our technical analysis strategies that we will be giving you guys. So there's a lot of information you will be learning, and then you'll also be getting 1 month service where you can come into our premium signals service, where you'll be getting trades into the markets to understand how to implement what you've learned. And then of course you have free access into the analyst channel where you get daily updates on the markets. So guys, a lot of information, in depth, really good. There's about 10 to 15 strategies we'll be teaching you guys for the technical analysis course, and then you can go ahead and you can implement it. But more importantly, you can then implement your own strategies, or even combine them with something that you learn on this course. So I hope this makes sense. Also, one more thing, just before I forget, you also get a recorded copy of the course that will be put into the members area of my website. So if you ever want to watch back the course, you have free access for a whole year to watch the course back as many times as you like. So guys, thank you for watching. I hope you take the course, and I look forward to speaking to you. Thank you.